What's up, everyone? It's Karthik with MoneyVest. So markets were mostly flat on the day. We are essentially entering a 14-day period, which is going to be one of the craziest, most volatile periods in the market. And we've got over $16 trillion worth of companies reporting their earnings this week. And we've also got unemployment numbers. So we've got Joel's numbers coming out tomorrow at 10 a.m. Eastern. We've got the GDP numbers scheduled for later this week. We got a couple bond auctions as well as the most important unemployment numbers coming out later this week as well. And of course, not to mention next week, not only earnings, but we've got the most important event, pretty much a global event, which is going to be the presidential elections over in the US, as well as the FOMC meeting as well. So Jerome Powell is going to be giving us the press conference on Thursday, November 7th, the day of my birthday. And he's going to be coming online at 2:30 p.m. Eastern, giving us the statement release at 2 p.m. Eastern as well. So all in all, the Dow Jones was slightly higher, 65 basis points up. A little bit of a risk-off rally here in the markets as technology got sold off, primarily Tesla selling off a little bit over 2%. S&P 500 up 27 basis points, and the Nasdaq also pushing up over 26 basis points on the day. Financials seeing a little bit of that recovery back up, over 1% on the day. Materials were up 83 basis points, with utilities recovering after that differential getting squeezed down to 6%, which we have discussed in our previous updates. As technology continues to start to catch up to utility trade, we are seeing that rotation back into that particular sector. Comm services, real estate, S&P 500, of course, industrials, discretionary staples. Most sectors were green, with technology basically flat. The bond market continues to struggle, and primarily energy stocks, XLE, selling off over 60 basis points on the back of a very, very significant sell-off in crude oil. So we were down over 5% on the day for crude oil, trading now down to under $68 per barrel, which is actually a good thing because for the month of October, we are now down by over 40 basis points. So that's actually going to be helping inflation when we get that report next month. And this is all happening on the back of Israel sparing Iran's crude oil facilities. So U.S. oil posting a worst day in 2 years after Israel spares Iran crude oil facilities. We actually got this catalyst last week as well. So oil prices lost a lot of ground on Monday after Iranian energy facilities were undamaged during the Israeli strike over the weekend. And Israel on Saturday attacked Iran's military installations in 3 provinces. And of course, if the crude oil facilities are intact, supplies intact. And as a result, that's one of the reasons why we actually saw the increase in oil prices in the first place. So really just kind of giving back on all the gains, and we're rotating back to where we were prior to this catalyst getting triggered. This right here, of course, was Max 7. Meta leading the day, up over 86 basis points. Apple also pushing up the same amount. Google up 80 basis points, and Microsoft, Nvidia, Netflix, Tesla, they were all red, with Tesla down over 2.4, almost 2.5% down on the day. So a couple updates that I want to share with all of you guys. So we've got a brand new feature update on our MoneyVest platform, which is going to be the elite investors. Now you can pretty much track the holdings and trades and transactions for some of the biggest investors in the world, including Warren Buffett, Bill Ackman, Cathie Wood, George Soros, Joel Greenblatt, you name it. We've got all of them on our platform. You can pretty much come over here, track their stock portfolios broken down by individual stocks and industries, as well as the actual trades and which quarter they made those trades. So all that data is going to be available now on the MoneyVest platform. So feel free to join. I also did send out updates over the weekend for the options portfolio week number 9. So you can watch that video as well. Absolutely crushing it. We've got so many people in the community absolutely killing it when it comes to options trading. So there's a couple more spots left with that 16% annual discount that expires at the end of this month. So we got 2 to 3 more days left if you want to take advantage of that as well. And this right here, of course, is going to be the Elite Investors, the brand new feature that we just launched. And you can pretty much come over here to any specific investor, take a look at their holdings, and also look at their historical transactions and trades and when they've actually bought or sold that particular stock. So for example, Bill Ackman, we're looking at Chipotle. Green represents buy, red means sell over the last 5 years, 3 years, 7, 10, 20 years, however back you want to go back to. And this is going to be the trades and, of course, the allocation for that particular stock as well. So that's going to be available. Now coming over to the MoneyVest index, we're sitting at 3.69. So we are still a little bit lower. We've been kind of hovering around 3.5 to 4. We've been in the optimistic zone for quite some time because the markets are not really moving a whole lot. We haven't seen a lot of volatility. However, that can change over the next 14 days because we've got a lot of stuff that's coming out, and 3.69 is where we're sitting. And the shopping list, the MoneyVest shopping list, is going to be released either tomorrow or the day after, but definitely before the end of the month of October. So that's going to be coming out fairly soon. I've already sent it over to my team, and they're going to be deploying that on the MoneyVest website. There's going to be a separate MoneyVest shopping list with 30 stocks that, in my opinion, are the highest quality companies with very proper technical support levels, buy targets, as well as my fair value. That's also going to be available by the end of October. So that's going to be the next feature update for everyone. Now coming over to the market snapshot, we're pretty much near all-time highs for most of these indices. You can see that we're well within 3 to 5% of all-time highs, and most of the stocks are either in a dip or a small pullback or a correction. Very few companies, including AMD, we got Qualcomm, Tesla, and Adobe, are in a bear market at the moment. Other stocks still well within all-time highs. So this has been a very, very strong market in 2024 in the US. And this right, of course, the entire heat map, Tesla taking the brunt of that pain. But overall, the markets were mostly green, with technology seeing a little bit of a sell-off, including Microsoft, Nvidia, Broadcom, Texas Instruments, Micron, so on and so forth. So those were really the stocks that were seeing a lot of selling pressure here on the day. So moving forward, we've got this right here as a breaking sort of prediction from Van Eck, predicting that Bitcoin will be used in global trade and become a reserve asset worth $3 million by 2050. So that right there is a very, very bold prediction. 2050, of course, being well over 20 years out, and $3 million is significantly higher than where Bitcoin trades today. Van Eck also projects central banks making a 2% allocation to Bitcoin, 16% year-on-year growth for 26% is a pretty significant number. And look, part of that analysis is mostly coming from the fact that this right here is the main concern. And I've mentioned this in the live stream earlier in the morning as well, that the way that the US continues to print a lot of money, and a lot of that deficits are being funded by the new issuances of bonds. We've got a couple auctions that are coming up. I'm going to go over the economic calendar later in the video, but as the US continues to issue a lot of bonds to kind of fund those deficits, the actual problem is that when there's an oversupply of bonds and there's a lack of demand from the buyers, from global investors, Japan and China being two of the biggest countries that hold US dollar denominated asset debt, if that demand starts to fade, what's going to happen is prices go down. And that's exactly what's happened with the bond market for the last 4 years. Bonds have been one of the worst performing assets in the last 4 years. And what does that do to the yields? It continues to spike up, right? So the 10-year treasuries still sitting well over 4.2.5%. On their way to up to 4.3.5%, a 60 basis point move, which is going to be a 2 standard deviation move in the last 1 month. We talked about it in our weekend video, is really when the market starts to care about where the yields are going. And that is going to be putting a lot of pressure on equities, because if the risk-free rate, which is the US government treasury bond, if that continues to go up, that's going to put a lot of impact on small caps, large caps, technology, growth stocks. Every risk-on asset is going to get affected. And this situation, unfortunately, is not getting any better. We talked about it very briefly during the live stream. And again, not to get too political here, but next week's presidential election certainly is going to play a big role in where the debt basically goes, the trajectory of the national debt, and of course, a level of deficits over the next 4 years. But if that continues to increase, yes, there's going to be a lot of progress. Yes, there's going to be a lot of improvement, a lot of growth in the US economy, and that's going to lead to potentially higher rate of return. It's going to lead to, equity markets and the real estate markets doing really well. But what's going to be the end game? What's going to be the end goal after 4, 5, 10, 20 years, when the debt levels have increased to as much as 40, 50, 60 trillion dollars, and the deficits are a couple trillion every year? And most of that's coming from higher interest rates. Why? Because this year alone, $1 trillion worth of interest on the debt. And the average interest rates is also going to keep creeping up because of the oversupply of bonds resulting in higher yields. And so that issuance of the new bonds is going to happen on higher interest rates. So it's a very, very bad cycle, which Ray Dalio has talked about. Jerome Powell has talked about it. Janet Yellen continues to shrug it off as something that is not important or not concerning. But I can tell you that nobody really has the answer to this very question. What's going to be the end game? And if that's going to continue to take place, one thing is for sure, that there's going to lead to a lot of currency devaluation. The US dollar is going to see a significant amount of devaluation, which is one of the reasons why I think gold is one of the best places to diversify. It's an uncorrelated asset class, and that's one of the reasons why I've been so bullish on gold over the last couple of years. And so I will continue to dollar cost average into that as well. So that is more of a macro discussion, which I think definitely requires a lot of attention over time. Been talking about this on the channel for quite some time, but shifting back to more seasonality and more shorter to medium term outlook, we're now entering into the best time for the market. Seasonality wise, the next 6 months is supposed to be very strong, as we know that November, December tends to be some of the strongest months for the market. If I bring up my seasonality spreadsheet, so I think this right here is going to be the one. Let me see if I can do that very quickly here. So there we go. So this right here is the seasonality spreadsheet since 1900. So we're going back well over 124 years. And what you'll notice is that November, December tends to actually be one of the strongest months for the market. And in more recent history, since 2000, you'll notice that November has a probability of being up by an average of 2%, 75% of the times. So that is a very, very high probability, 70% for December. And then take a look at January, February, March, April, and May. April and May more specifically, once again, 72% each. So the next 6 months, we're talking November all the way through May, is the best time for the market, right? Of course, the worst time, including June, July, August, and we got September, October seasonality also being some of the worst seasonality there. But November, December, and more specifically March, April, and May are some of the best months for the market from a seasonality standpoint. And this chart essentially represents that IWM more specifically has a better rate as well. We got a 73% from November all the way through April for small caps, and an average return of well over 9.3% compared to the S&P 500 of 6.8%. However, there's also some concerns around volatility and what that's going to do to the market, because VIX still is pretty elevated. And I really want to prepare you guys for this very thing. And why do I say that? Is because if you take a look at VIX and how it's traded in the last 3 months, August, September, October, just look at those 3 months. The first week of these 3 months, VIX spiked higher. This right here was the month of August. This right here was the month of September. And this right here was the month of October. So every last 3 months here, the first week, the volatility spiked. And what did that do to the market? Sell off, right? So we had the Money Invest Index come down. So if you pretty much come over to the Money Invest Index here, you'll notice this right here was the first week of August. This right here was the first week of September. And this little dip over here was the first week of October. And right now we're coming back down to 3.64, 3.69. That's where we are. This number still needs to get updated. This is a line chart, but on the website you can see that we are currently sitting at 3.64. So if you come over to the Money Invest Index here, 3.69. So we're still in the optimistic zone. But if the first week of November, next week, given elections and given the FOMC, if you start to see this number come back down again, sub 3.5, in other words, anything that's in the neutral to that green zone, that's going to be a buying opportunity. That's exactly why I want everyone to be ready with our shopping list to deploy capital when the opportunity presents itself. So that's why I'm going to be cash ready to buy more, be more aggressive, whether it's ETFs or individual stocks. If you do see another VIX spike here, getting back up to 23, 25, or as much as 30, 35, and of course the market's coming down, Money Invest Index coming down, that's only going to be screaming a buying opportunity for us dollar cost average into. So just be ready, be on the lookout. There's going to be specific buy targets for high quality stocks, 30 of them, which I'm going to be publishing here in the next couple of days. It's going to be available on the MoneyVest website. So again, if you want to get access to this entire shopping list, it's, we do thorough research, extensive analysis on these companies to put out this sheet. Link's going to be down below. Again, 16% annual discount. That's available until the end of this month. Now, coming over to the 10-year treasuries, we are sitting at 4.28, a little bit under 4.3%. So again, the higher this number goes, the more problematic it becomes. And the level to really keep in mind is 4.35%. So maybe another 70 basis points higher. And that's going to be somewhat of a problem for the 10-year treasuries, right? Because in the last 1 month, then we'd be 2 standard deviations higher. And that's obviously going to create a bit more pressure on equity market, because the higher the yields go, the more problematic it becomes for growth stocks specifically. Gold prices also trading near all-time highs at $2,741 per ounce. So this again continues to trend upwards, which in my opinion is still a pretty solid dollar cost averaging opportunity for the long term, because my time horizon for gold is significantly more. And I think both gold and Bitcoin are uncorrelated. They're good hedges, and a part of way it's going to be somewhat of a diversification against the very important macro discussion related to the money printing, the deficits, and the national debt levels. So we got 48% stocks trading above their 20-day moving average. We've got this number coming down to 55% of stocks trading above their 50-day moving average. And in terms of 200 SMA, the market continues to be very broad. This rally continues to be very strong. Coming over to the market concentration, you'll notice that, again, big three here selling off 6 billion, but max 7 up over 7.2, and top 10 up over $47 billion, with majority of those gains coming from Apple, 30 billion, Google, 18 billion, Meta, 12 billion, JP Morgan, AMD, Amazon. So most of the financial stocks and banks were the ones that were pushing higher. So you can pretty much see that over here. 1.2% increase, or $74 billion gain for banking. And the stocks, of course, that were selling off the most: Nvidia down 25 billion, Tesla 23 billion, Microsoft 11.6, Broadcom over $4.5 billion sell-off as well. Now, what's on the calendar? Well, we got lots of companies reporting. Google, by the way, is going to be reporting after the bell tomorrow, along with Visa, AMD. Then we've got PayPal, we got Chipotle, and then of course later this week we got Microsoft, Meta, Apple, Amazon, MasterCard, Eli Lilly, Caterpillar, ExxonMobil, Chevron, Starbucks. These are all companies reporting their numbers this week. Economic calendar wise, we already know we got the JOLTS numbers tomorrow at 10 a.m. Eastern. Then we got the GDP numbers on Wednesday. We got the personal consumption expenditure, the PCE, that's the Fed's preferred measure of inflation. Then of course we got Friday, the very important unemployment numbers, the first Friday of the month of November. We've got the unemployment numbers also coming out. So coming over to the markets now, S&P 500 closing in at 5,823, up over 27 basis points. But for the most part, it's really just been consolidating sideways. So this is really where we are. A lot of sideways action. Support level 57.66 down to as low as 56.60s, down to, of course, a much stronger support in the 5400s. So those right there are going to be some levels to keep in mind for S&P 500. Of course, a near-term resistance right now that stays put right about there at 58.78. That's pretty much the all-time high for S&P. Coming over to the Nasdaq, and you can see, like, this is actually quite crazy. This should be mind-blowing that we actually got rejected right there. I mean, take a look at that rejection here, 18,663. We've been talking about this rising wedge for the Nasdaq Composite for quite a few weeks now, and it's perfectly played out. I mean, it just pushed up, sold off, got bought up here, pushed higher, got rejected there. So I'm not feeling super confident here. Like, I really, to be honest, like from a technical perspective, given that the rising wedge here breaks to the downside, you know what? Let me just pull it up very quickly so I can show you guys. Rising wedge pattern. And we're just going to do a simple Google search. And this right here is what I really want to show you. It's a simple pattern like this, where you can see the rising wedge. If it's making that higher high and higher low pattern, it breaks to the downside, right? Because of that pattern and how it works out. This right here is another example of how this rising wedge eventually breaks to the downside. So we got something very similar. Look, I'm not saying that Nasdaq's going to break to the downside like this. 17.7 is where we're headed next. But yes, it is a possibility given that November volatility is right around the corner. If volatility spikes first week of November, just like the last first weeks of the month of August, September, October, elections, FOMC, earnings, there's a lot on deck here. And if you do see any type of a pullback and the money invest index comes down and the volatility spikes and market breadth starts to weaken down, the shopping list, in my opinion, is going to come in super handy during that time. And that, the next support is going to put us down another 4 to 5%. It's going to be a nice little dip for the market. So keep a close eye at 17,700. That's the level to really be focusing on if we see any type of a breakdown from this rising wedge. Coming over to Apple stock, and Apple here continues to validate this uptrend. That's the higher low, and resistance is going to stay roughly at 237. So that's going to be that target to keep in mind. Very nice little ascending triangle formation. We'll see whether it breaks to the upside, or if it gets rejected, support level to watch is going to be 221. Talking about Amazon, and Amazon is also going to be reporting earnings later this week. So resistance staying perfectly intact at 189, closer to 190. Support level at $181. That's right here is a little bit of a symmetrical triangle formation as well. A lot of consolidation, a lot of sideways action here for Amazon, and support level 181, resistance 189. Coming over to the big loser on the day, which was Tesla, selling off very aggressively. And look, this was not a surprise because if you come over to Tesla's chart, you know very well where the resistance is. I've been talking about this on the channel for quite a few days, quite a few times here, that we're coming up to a huge resistance for Tesla, like 270s. We've just not been able to break out above this level for a really long time, given the overbought RSI and the MACD and the fact that we're just coming up to that supply and that area of resistance again. It's very normal. It is not surprising at all for Tesla to get rejected and then of course sell off down almost 2.5% on the day here. Nvidia, on the other hand, continues to consolidate sideways as well. Resistance is going to stay put at 144, 145. Support level down to as low as 136 for Nvidia, and again, a lot of consolidation sideways for this company as well. Advanced micro devices starting to recover back up, so very nice, momentum back up from this higher low. Coming in. Next support, next resistance is going to be all the way up to as much as 173. That's going to be that next target to watch for AMD, and support level, of course, staying put roughly in the 150s for this company as well. Coming over to PayPal, and PayPal here continues to break to the upside. A very, very nice move, up another 2.3%, up another 1% after hours, reporting earnings tomorrow. Looks like before the market opens or maybe after the bell. Expectations for over $1 per share and $7.88 billion in revenue. And next resistance is going to be up to $88, $89. So very, very nice move for PayPal to the upside. Support level is going to stay put at $81 per share for this company. Visa, on the other hand, also pushing higher. Resistance is going to be $291. Support level is going to stay put at $282 per share, down to as low as 278, down to 272. We've discussed this many times over, but a lot of consolidation sideways at the moment. Resistance staying put at 291. Coming over to Costco, and Costco here consolidating sideways, continues to trade in that range. Support level 872, resistance all the way up to 919 for Costco. Enphase also we have discussed extensively. It's done a really good job kind of filling up this gap for the most part. Trading back above that support of $83, so that right there is going to be that support level to watch. And of course, we got a huge resistance here at $89 to as much as $94 for Enphase Energy. So that right there is going to be that resistance to keep in mind for Enphase. Support level is going to stay put at $83, $84 for this stock. Coming over to Meta Platforms, and Meta here was one of the few stocks that pushed up over 86 basis points higher. Resistance is going to stay roughly at 580. Support level at $540 for Meta. So we're seeing a little bit of that lower highs and lower lows. Something very similar to what we witnessed here, where Meta was down a little bit over 8.5%. Right now it's down over 4.5%. So, we've seen these instances where Meta also is a little bit weaker. But then, of course, eventually we see a nice little breakout to the upside. So $600, again, continues to be that resistance for Meta. Netflix, on the other hand, support level is going to stay up roughly at $736 per share. A little bit of that resistance, all-time high at 772. And again, we got a huge gap to also potentially fill for Netflix. They've already reported their earnings, huge jump in subscribers and advertising revenue for the company as well. So support level is going to stay put at 736. Coming over to Google, and Google here also consolidating sideways in that range, in between that area of resistance. Next target is going to be 176, so that's going to be that next level to keep in mind, with a very strong support sitting roughly at 153 for Google as well. Finally, coming over to Microsoft, and resistance is going to be at $432 per share. Support level sitting roughly here in the 390s or pretty much low 400s. And this right here is going to be the target where Microsoft needs to break out in order to get up to as much as 450s and 470s again. So look, a lot of them are going to be part of our shopping list with our specific buy targets that are going to be available for everyone to access and, of course, use as a guiding reference point, so that you can do your further analysis and research on these companies to better make sense of whether it fits your portfolio or not. But yes, that's going to be the update for today. Next 14 days, be very, very cautious as volatility here continues to be a little bit more elevated, trading just under 20. Crude oil prices selling off, which is a good thing for inflation, and gold prices near all-time highs, but the market's very vulnerable on the back of a lot of earnings and a lot of economic data that's coming out. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like and subscribe to the channel. Don't forget, you can access everything, including our MoneyVest website, trade alerts, options alerts. Everything's going to be available with that 16% annual discount that expires at the end of this month. So link's going to be down below. We'd love to have you on board. If you have any questions, please feel free to reach out. As always, happy investing. I'll see you all in the next video.